Q1 result season is on and many companies have already posted their numbers. Now personally, I keep a close eye on around 300 companies that help me identify investment opportunities. So in this video, I want to share a list of companies that have posted excellent results. Although one of the biggest challenges today is many companies are trading at higher valuations. There has been a one-way rally in the market for a long time and valuations are certainly not cheap. Still, I have tried to identify companies that have done well in Q1 and have relatively decent valuation. But before we discuss further, please note that market is always forward-looking. Even if the Q1 results are excellent, there can be a case where the good news is already priced into the valuation. Moreover, it's not only about Q1 result or a specific quarter result. It's more about growth expectation in the future. So there is no guarantee that if Q1 is great, the coming quarterly performance will also be great. Likewise, there can be a case where a fundamentally strong company has posted weak result, but future expectation is good. So that can also create buying opportunity. The point is, while quarter results are a great way to identify potential companies, it's very important to look at holistic picture of past performance along with future expectation. And for that, you should read the con call transcript of companies because that's where you get all the required information about the expectation from the company. Basically, after every quarter results, top listed companies of India conduct an analyst call where analysts ask questions and all this conversation is documented as a con call transcript that you can easily find on screen in their website. In fact, majority of my time is spent in reading these con call transcript. Alright, with this, let's get started with the companies that have posted excellent results and valuations are relatively decent. Okay, before we discuss the companies that have posted excellent numbers and decent valuation, I just want to share some of the names where the valuations are expensive. So there are a lot of companies that have posted excellent results, but the valuation comfort is not there. One of them being Dixon Technology. Look at the performance, top line, bottom line, exceptional growth, but the challenge is P ratio is 160. So the valuation comfort is not there. Valuations are too expensive. So a majority of good news in the future is already priced into the current valuation. Then you have got another name, Keynes Technology, again part of EMS theme. Electronics industry is growing leaps and bounds in India. And again, look at the performance, exceptional numbers. But then the challenge is its P ratio is 130. So the valuation comfort is not there. Then another example is Netweb Technology. Again, we have discussed this company at levels of around 1100. So stock has already doubled in few months. And look at the performance, exceptional. Profit has grown 200%. Sales are up 150%. The problem is P ratio is 149. So the again challenge is expensive valuation. Then you have got another example, Genius Power. This is again one company we discussed a few months ago. Look at the performance. Net profits are up 120%, but then P ratio is 115. Having said this, there's a latest commentary from management that said that they have kept their guidance of 2500 crore for FY25 and EBITDA margin at 15 to 16%. So the top line would grow, there would be your operating leverage that would play in. And if you look at Genius Power P&L for March 24, it did a sale of 1200 crore. So FY25 target is 2500. So very optimistic number, and not even that, even EBITDA margins are at 15-16% versus 11% EBITDA of March 2024. So if Genius Power can live up to the expectation and can deliver these kind of performance for FY25, I think the stock can continue to do well in the future. Then next result is of Zomato. Look at the performance. What an outstanding number. Sales 74%, EBITDA up 469%, net profits are up. So it's 253 crore versus 2 crore of June 2023. Again, a fantastic turnaround story, but the challenge is market cap is 2.34 lakh crore. So I believe that majority of good news in the future is already priced into the valuation. However, as long as Zomato continue to outperform like this, its share price can go up. But then with this, the valuation comfort is only going to reduce over time. So that is one concern. The valuations are on higher side. Having said this, it has been a great turnaround story from Zomato. Now let's move on to some of the companies where the results are excellent, but valuations are on higher side. They're not very expensive, but still on the higher side. And one of the name is KPIT. Again, one of my top picks, discussing it for a very long time. And it's been a very good performance. Sales up 24%, EBITDA up 34%. Net profit, again, it is showing 53%, but the reason is because it include a one-time gain. So if you exclude that, even in that case, it's grown at 42.2%. So that's a very good performance. The challenge is P ratio is on higher side at 72. But in my opinion, this is one pure SIP grade stock where you can consider investing, in a SIP mode. And if there's any correction, it can be considered to invest more. But again, it's not a stock tip. Please do your research before investing your money. Next result is Newgen Software. Again, a fantastic set of performance. Top line up by 26%, EBITDA up 49%, net profits up 56%. What a consistent outperformance by this company. Market cap today, it's around 13,600 crore. P ratio is 54. So in my opinion, Newgen will command a premium. You can't expect Newgen to trade at a PE of 25-30. The reason is because it's a SaaS-based product company. It is not a typical IT company. It's a product company that to operate on SaaS-based model, and companies that operate on SaaS-based model have got a kind of business model that will always command a premium because of the growth rate and the future growth potential. And that is the reason I believe Newgen should continue to do well in the near term as well. So, and the long-term story is 100% intact. Then another fantastic performance is from Affle India. After a long period of weakness, nearly 3 years of underperformance, Affle India has done very well. Top line up 28%, net profits up 31%. Again, the challenge is the P ratio is not very comfortable at 65.9. Having said this, like I said, Affle India would again command a premium. Then I've got another results which is of PG Electroplast. This is a company into your EMS space. So another electronics play company. Market cap is around 11,000 crore. Look at the sales, EBITDA, net profit, everything fantastic. P ratio is on higher side at 60, but still it is one of the most reasonable company in the entire electronics play. And that's where I think it is looking quite promising. In fact, management has given a clear guidance where they expect the total group revenue to grow at 54.7% in FY25. So that is the expectation. And there's a net profit guidance of 216 crore, which is a growth of 57.7% over FY24. So fantastic guidance, and that's where I think there's more upside potential. Then next company is Sona BLW. Again, one of the fantastic company playing into your auto auxiliary space, especially for electric vehicles play. And that's where if you look at the numbers, fantastic performance across top line, bottom line. The only challenge is P ratio is at 70.9. So valuations are on higher side. Having said this, I think the long-term growth story of Sona BLW is intact. Again, a great SIP grade company. Next is a very interesting company called Exicom Telesystem that I've been tracking for some time now. It is basically into your EV charging system and also into your telecom charging. So the battery for telecom, and that's where I think there's a huge market for Exicom, and it's a small cap company, market cap of 5,000 crore, price at around 420, 430 recently. P ratio is around 61.9. So valuations are slightly on the higher side, but the performance is top notch. Although quarter on quarter, as compared to previous quarter, there's a degrowth, but overall, if you look at it as compared to say previous year same quarter, it is an outperformance. And the good thing is, company has done very good announcement recently, and that's where it is looking quite promising. Stock is down around 20% from its peak. So maybe I'm planning to do a detailed video on Exicom Telesystem in the near future. All right, now let's move on to the companies that have posted excellent results and the valuations are decent. But before that, in case you are a long-term investor and looking to associate with me closely, there's a weekly video series that I've been doing where I spend nearly 8 to 10 hours a day keeping a close on the market. So what I do is I try to identify opportunities in the market, as well as I track more than 300 companies. There's an Excel tracker that I've been maintaining. So that also helps in identifying opportunities. So in case you are interested, you can visit my website and just go to the courses and explore this weekly video series. You can also do it via the join button on this YouTube channel. Now let's move on to the companies with decent valuation. First is Tata Motor. So if you look at the sales, it's up 6%, but EBITDA is up 19% and net profits are up 52%. So excellent expansion in bottom line. Current valuations are around 1,025. Market cap is 3.76 lakh. In my opinion, Tata Motor is one of the best play in large cap space and a consistent compounder, where I believe that in the next 10-20 years, Tata Motor is going to generate a lot of wealth. Valuation wise, there's a lot of comfort trading at a PE of 11. If we check the latest PE of Tata Motor, it's at 11.6. Look at the price to sales 0.89, EV to EBITDA of 6.6. So a lot of valuation comfort and the results are excellent. Then another company is your ICICI Bank. Especially when the entire banking sector is struggling, ICICI Bank has posted excellent set of number. Earnings are up 11.8% year on year. Core operating profit has grown 11%. Again, this is relative number because in large cap you can't expect 40-50% kind of growth. So as compared to the weakness in banking sector, ICICI Bank has done very well. Deposits of 17.8%, advances of 15.9%. Asset quality is top notch at 0.43%, and profit after tax has grown by 14.6%. So in my opinion, excellent performance. And the best part is there's a lot of valuation comfort at a PE of 18 and price to book of 3.23. One of the leading player in the private banking space, where I think there's more upside potential. Then next fantastic performance is from Nuvama Wealth. Entire wealth management space is doing fantastic, and within that I believe Nuvama has got one of the best valuation comfort. Sales of 47%, EBITDA 70%, net profit of 80%. Valuation comfort is there at a PE of 30, so looking quite promising. Then another excellent result is from Angel One across parameter, and valuations are also quite attractive at PE of 16. But the only challenge is that there's a caution because of this SEBI FNO regulation overhang, and that's where market is quite cautious. But again, this is wait and watch. I think once we get this clarity on this FNO regulation, then we'll take a call what to do with Angel One. Next, fantastic set of performances from CDSL. Sales up 72%, EBITDA 94, net profit up 82%. So it's a fabulous performance. Again, CDSL is a proxy for your growth in stock market. So if stock market would do well, CDSL is going to do well. Please note that there will be cycles, because if the stock market underperform, it will impact CDSL performance. But the long-term structural story of CDSL is 100% intact. Today, it's a market cap of around 25,000 crore, trading at a PE of 51. Although PE is slightly on the higher side at PE of 51, but then it will command a premium because it's a leader in the space and the weight is growing. Again, you can't just look at standalone PE. It has to be in relation with the earning growth, and that's where I believe the weight is growing. The valuation comfort is there. Then next result is of CAMS. Look at the sales of 27%, EBITDA up 36%, net profits of 41%. Market cap is 20,000 crore, P ratio is 53. So again, it will command a premium. Like I said, it's a proxy for mutual fund investment in India, which is still in nascent stage. I keep saying this. Having said this, again, it's a proxy for market. And if there's a degrowth in the market because of, let's say, there's a bear market, in that case, CAMS may underperform, but the long-term story is 100% intact. Again, a pure SIP grade stock, both CAMS and CDSL. Then next result we have is of SW Solar. We have again done a detailed video on SW Solar turnaround story. Sales up 78% year on year. EBITDA, it was at loss, now it is positive, and net profit also it was at loss and now it is positive. So very good performance. Market cap is around 15,000 crore. The interesting part is that the growth guidance for FY25 is fabulous. So currently, if you look at SW Solar, its FY24 revenue was 3,000 crore and management has guided for 8,000 crore of revenue for FY25. And that's where in the latest con call, the question was that on this revenue guidance for FY25, I think we are holding 8,000 crore mark. Now just could you guide how it would be phased over the next 3 quarters? So if you look at Q1 number, SW Solar Q1 number is just 915 crore and the guidance is 8,000 crore for entire year. So the question was, would one assume that the second half would be something like 6,000 crore sort of revenue? On that, management said that yes, you are right. Revenue execution pace will pick up from Q2. We remain very, very confident about the revenue guidance we have given. As you know, Q1 is always muted in the EPC industry. Then there is no surprise in that. So revenue pace will pick up significantly from Q2 onward, and the second half will be very, very strong, with the Q4 being the strongest. So if we go with management guidance, SW Solar, if it can achieve its guidance, it can grow exponentially in FY25. Then next we have got fantastic number from Suryodaya Small Finance, especially when the entire small finance sector is struggling. Suryodaya has posted fabulous set of numbers. Gross advances are 41.8%, disbursement of 46%. Then deposits are up 42%. Now your net interest income up 30%, your gross and net NPA asset quality has improved, your cost of fund is 7.6%, and if you look at pre-provisioning operating profits up 23%, both ROE and ROA have improved, and all in all, it's a fantastic performance by Suryodaya. The best part is it's trading at a very attractive valuation at a PE of 8 and price to book of just 1.26. So looking quite interesting. The only thing is currently there's a negativity around the entire small finance space, mainly because of challenges in the microfinance industry where there are a lot of slippages, and that's where it's being cautious. But having said this, I believe Suryodaya with this kind of result and the valuation looking very, very promising. Then we have got results of Sami Hotel. Again, next quarter of outperformance. Since 2 quarters, it has been a turnaround story, became profitable. RevPAR growth is 13%. Total income is up 33.5%. EBITDA is up 43.7%. The most attractively priced company in the hotel space, where a company has a EBITDA of 19.6 and price to sale of 4.4. Then next we've got results of RBL Bank. Within, I think, the banking space, RBL Bank has posted fantastic set of number. Net interest income is up 20% year on year. Your operating profit has grown 33%. Net profits are up 29%. And across sector, if you look at it, retail deposits are up and retail advances are up 31%. Retail granular deposits are up 25%. And now account for 49.3% of total deposit. Asset quality is also quite stable. In fact, net NPA is down by 26 basis point and now it's at 0.74. So across all parameter, RBL Bank has posted very good numbers. And the best part is the valuations are at 10.6 PE and price to book is even below 1. It is at 0.88. So in my opinion, it's looking quite promising. Next, we've got results of Precall. Sales are 15%, EBITDA of 24%, net profits of 43%, and trading at a PE of 39.7. I believe there is more upside potential in Precall. Then we have got fabulous numbers from Gravita India across top line, EBITDA and bottom line. Valuations are at 47.8, but the kind of guidance management has given for both its top line and bottom line for the next few years, Gravita India is looking very, very promising. Again, we have done detailed video. It is into the recycling space sector. So the entire sustainable growth, sustainable sectors are also looking quite promising. And final results I want to discuss of Sport King India. This is into your textile play, where the sales are up 18%, EBITDA 48%, net profits up 75%, and trading at a P ratio of 20. And that, in fact, it's a micro cap company, market cap of just 1300 crore. So this is it from my side. I hope you'll find this analysis useful. I'll see you next video. Till then, take care.